Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Motorola Solutions Inc. Annual Report. Motorola Solutions Inc. offers a wide range of businesses and services across various industries. The company's products and systems integration segment provides infrastructure, devices, accessories, and system integration for government and enterprise customers. This includes mission-critical networks, video security solutions, access control technologies, two-way radios, video cameras, and software applications. The software and services segment offers public safety and enterprise command center solutions, unified communications applications, mobile video equipment, and video software solutions. Additionally, the company provides repair, technical support, maintenance services, monitoring, software updates, and cybersecurity services to government, public safety, and commercial networks. Motorola Solutions serves various industries such as hospitality, manufacturing, military and defense, police, air transportation, fire and rescue, stadium, emergency medical services, mining, oil and gas, transportation and logistics, utilities, education, retail, and healthcare. Unfortunately, I do not have access to the text you provided. However, I can still provide a general overview essay on what could cause Motorola Solutions, Inc. stock price to increase. Motorola Solutions, Inc. has experienced a slight increase in its stock price over the past year due to several factors. One of the primary reasons is the company's strong financial performance. With a consistent track record of delivering high-quality products and services, Motorola Solutions has been able to maintain its market share and expand its customer base. Another factor contributing to the increase in stock price is the growing demand for public safety solutions. As governments around the world invest heavily in modernizing their emergency response systems, Motorola Solutions has positioned itself as a leader in this space. The company's innovative products and services have enabled it to capture a significant share of this growing market. Additionally, Motorola Solutions' strategic acquisitions and partnerships have also contributed to its stock price growth. By expanding its portfolio through strategic acquisitions, the company has been able to diversify its revenue streams and increase its competitiveness in the market. Furthermore, the company's commitment to innovation and research and development has enabled it to stay ahead of the curve in terms of technology. With a strong focus on emerging trends such as artificial intelligence, cloud computing, and cybersecurity, Motorola Solutions is well-positioned to continue delivering growth and value to its shareholders. Overall, the combination of Motorola Solutions' strong financial performance, growing demand for public safety solutions, strategic acquisitions and partnerships, and commitment to innovation have all contributed to the increase in its stock price over the past year. Motorola Solutions, Inc. market capitalization of $77 billion is significantly larger than the average industry peer of roughly $3 billion. This shows that Motorola Solutions, Inc. holds a significant advantage in their industry. Motorola Solutions, Inc. trades at a higher price-to-earnings ratio of 36 times and a higher price-to-book ratio of 31.69 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The company exhibits a very high leverage profile, with liabilities accounting for 87% of total assets. This elevated debt level warrants heightened caution, as it may limit the company's financial flexibility and increase risk during economic stress. We have to further examine the industry and the nature of the business to determine if they justify the current valuation. Average liabilities have increased consistently as the company expands. Importantly, both assets and shareholder equity have grown at least 20% faster than liabilities, indicating that the business is expanding substantially and generating value after covering its obligations. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The company has consistently reduced its share count, while revenue and equity have grown, indicating disciplined buybacks that enhance long-term per-share value. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth for Motorola Solutions can be attributed to several key factors. the company's command center and video software and services have been a significant contributor to its revenue growth. Additionally, the expansion of managed service offerings has also played a crucial role in driving revenue upwards. Furthermore, the increase in fair value of debt from $5.8 billion to $9.2 billion, as well as the rise in long-term receivables from $65 million to $93 million, have all contributed to the company's revenue growth. In terms of specific numbers, interest income on long-term receivables has increased from $0 to $1 million over the past 2 years. This increase is a result of the company's efforts to optimize its financial performance and maximize returns on its investments. Overall, these factors have all contributed to Motorola Solutions' revenue growth. On the other hand, while there are no explicit drivers of revenue decline mentioned in the summary, some regions such as the United Kingdom and Canada have experienced a decline in revenue. However, it is worth noting that these declines are relatively small compared to the overall revenue growth experienced by the company. By the net income and profit margins, a changing landscape, the net income of a company underwent significant changes between 2023 and 2025. Initially, it decreased by $557 million due to various factors in 2024 compared to the previous year. However, this was followed by an increase of $615 million from a loss of $489 million to a gain of $126 million in 2024. The net income continued to rise, increasing by $1,709 million. The profit margins also experienced fluctuations during this period. In the software and services segment, the profit margin increased from 25.7% in 2024 to 27.7% in 2025. However, it decreased due to increased costs associated with system contracts and the acquisition of Silvus. The Products and Systems Integration segment saw no change in its profit margin between 2024 and 2025, but experienced a decrease due to an increased income tax expense in 2024. The reasons behind these changes are multifaceted. Higher sales, improved operating leverage, and higher gross margins contributed to the increase in net income and profit margins in 2025. Additionally, acquisitions of various companies played a significant role in boosting net income in 2024. These factors demonstrate that the company's financial performance is influenced by a combination of internal and external factors. The company's financial performance suggests a strong ability to generate cash from its core operations. One key indicator of this is the net cash provided by operating activities, which has increased from $2,391 million in 2024 to $2,837 million in 2025. This upward trend indicates that the company is successfully converting its earnings into cash. Furthermore, an examination of the company's balance sheet reveals a notable increase in long-term receivables and interest income on these receivables. This suggests that the company is generating significant amounts of cash from its customers, which is a positive sign for its operating performance. Overall, the evidence points to the conclusion that the company is indeed generating positive operating cash flow. The company's debt level and interest expenses have undergone significant changes over the past few years. Initially, the debt decreased by $1.6 billion from 2024 to 2025, but then increased to $9.2 billion in 2025, a substantial rise from $6 billion in 2024. Long-term debt specifically rose to $8,476 million as of December 31, 2025. However, there was no mention of change on page 53, and the increase mentioned on page 60 is not directly comparable due to different figures provided. In terms of interest expenses, the trend is somewhat mixed. On one hand, it increased by $75 million from 2023 to 2024, and then decreased by $75 million from 2024 to 2025. However, another source indicates a significant increase of $75 million, 33%, from 2024 to 2025. Furthermore, interest expenses were reported to have decreased significantly from -$295 million in 2024 to -$360 million in 2025. Overall, the company's debt level has increased significantly, while its interest expenses show a mixed trend with both increases and decreases observed across different periods. The performance of the company's segments and regions varied significantly in recent years. In terms of segment performance, the Products and Systems Integration segment stood out as a strong performer, with notable increases in both net sales and gross margin. Conversely, the software and services segment struggled, experiencing declines in both metrics. Regionally, the United States emerged as a top-performing region, with increasing net sales. However, other regions did not fare as well. The United Kingdom and Canada regions saw decreases in net sales, indicating areas of concern for the company. On a more positive note, the other region reported increases in net sales, suggesting growth opportunities outside of these two underperforming markets. The company is shifting its focus towards a more service-oriented approach, with significant investments in software and advanced offerings such as monitoring, cybersecurity, and software updates. This move is part of the company's broader strategy to expand its services and reduce reliance on traditional revenue streams. In terms of financial management, the company is taking steps to mitigate currency fluctuations through the use of derivative contracts. It also has a robust tax planning strategy in place, aimed at realizing deferred tax assets and minimizing additional income tax charges. Employee incentives are another key area of focus for the company, with incentive plans designed to reward employees for meeting business goals and individual performance targets. The company is also prioritizing debt management, repaying debt and issuing new debt to fund its activities through long-term financing arrangements. Finally, the company has a clear commitment to returning cash to shareholders, with a focus on common stock dividend payments and share repurchases. Overall, the company's strategy appears to be centered around investing in growth opportunities, managing financial risk, and prioritizing shareholder returns. Motorola Solutions has made several strategic acquisitions to expand its offerings and capabilities. Notably, the company acquired Silvus in August 2025, Blue Eye in November 2025, Theatro in March 2025, Rapid Deploy in February 2025, 3TC Software in October 2024, Noggin in July 2024, an unnamed vehicle location and management provider in July 2024, Silent Sentinel in February 2024, and IP Video in December 2023. These acquisitions have likely enhanced Motorola's product portfolio and market presence. On the other hand, the company has also undergone divestitures to streamline its operations and focus on core business areas. Notably, Motorola Solutions licensed its Motorola Marks trademark to Motorola Trademark Holdings, LLC. The company also separated from Motorola Mobility in 2011, a move that likely allowed it to concentrate on its core business. Additionally, Motorola Solutions has discontinued certain facilities and waste disposal sites, as well as retained pension liabilities following past divestitures. The company has demonstrated its commitment to returning value to shareholders through two key initiatives. Firstly, it has paid dividends, providing a direct return on investment to shareholders. This is evident in the financial reports, where the amount of $728 million is consistently mentioned across multiple pages. In addition to paying dividends, the company has also engaged in share buybacks, another way to reward investors and boost their returns. The company has invested significant funds in this initiative, with a total of $1.2 billion allocated for share repurchases, as per the reports on pages 35, 47, and 79. Concerns about inventory buildup and supply chain disruption. There are growing concerns about inventory buildup and supply chain disruption in various industries. One key indicator is the increase in backlog from $14.697 billion to $15.742 billion, suggesting a potential accumulation of unsold goods. This trend is further supported by page 86, which highlights projected increases in inventory levels for 2024 and 2025. Supply chain disruptions are also on the rise, with several factors contributing to this issue. The difficulty in obtaining rare earth minerals and other commodities, labor shortages, regulatory changes, and natural disasters are all posing significant challenges. Suppliers are struggling to meet demand due to supply chain constraints, trade policy decisions, or financial issues. Furthermore, third-party providers are failing to deliver quality components or products on time and at reasonable prices. The volatility and uncertainty surrounding the global supply chain have reached new heights, particularly in the memory market. Take-or-pay agreements with suppliers may result in exceeding minimum obligations, indicating potential inventory buildup or supply chain strain. These concerns highlight the need for companies to reassess their inventory management strategies and supply chain resilience to mitigate these risks. That concludes the financial summary for Motorola Solutions Inc. Feel free to comment below, and I will be happy to answer them when possible.